Hey everyone, and welcome back to the channel. Today, we're re-diving deep into something you might see every day but rarely think about as a major economic indicator. Silver. Most of us know gold as the ultimate safe haven asset, the big, flashy barometer of financial fear. But what if I told you that its less glamorous cousin, silver, might actually be sending a more urgent and revealing signal about the state of the global economy right now? Stick around, because what silver is doing is pretty fascinating, and it could have major implications for all of us. So, let's start with the basics. What makes silver so special? Unlike gold, which is primarily a monetary metal sitting in vaults, silver wears two hats. It's both a precious metal, a store of value, and a critical industrial metal. This dual nature is exactly what makes it such a unique economic belt. Think about it. Silver is in everything. It's in your smartphone, your laptop, the solar panels on your neighbor's roof, and the electric car you've been eyeing. Its incredible conductivity and durability make it indispensable for modern technology. This means that the demand for silver is tied directly to industrial activity and economic growth. When factories are humming, when companies are innovating, and when consumers are buying new gadgets, they need a lot of silver. So, a surge in industrial silver demand usually points to a healthy, expanding economy. On the other hand, when industrial demand for silver starts to slow down, it can be an early warning sign. It suggests that manufacturing is contracting, production is being scaled back, and a potential economic slowdown or even a recession could be on the horizon. This is why economists and savvy investors often refer to silver as the canary in the coal mine. But remember, silver has another side to its personality. Its role as a precious metal. Who's to like gold investors flock to silver during times of uncertainty? When there's fear of inflation, currency, devaluation, or geopolitical instability, people buy silver to protect their wealth. It's seen as real, tangible money, a safe harbor in a financial storm. So, you have this constant push and pull. Industrial demand reflects economic health, while investment demand reflects economic fear. The interplay between these two forces is what makes the silver market so compelling to watch. Now, let's talk about something that makes this whole equation even more interesting. The gold-to-silver ratio. This is a simple but powerful metric. It tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has hovered around certain levels, but when it gets out of whack, it signals something significant. For a long time, the historical average was somewhere around 15-1, but in modern times, it's been much higher, averaging between 50 and 70. When the ratio spikes, say, 280, 90, or even over 100, it often means investors are extremely fearful. They're dumping assets and piling into gold, the ultimate safe haven, even more so than silver. This flight to safety often precedes major economic downturns. Conversely, when the ratio starts to fall, it can suggest that confidence is returning, and investors are more willing to bet on industrial growth, which favors silver. So, what is the silver market telling us right now? This is where it gets really intriguing. We're seeing a fascinating and somewhat contradictory picture. On one hand, the demand for physical silver for industrial use is hitting record highs. This is largely driven by the green energy transition. Solar panels, in particular, are incredibly silver-intensive. The global push for decarbonization and renewable energy means we need more silver than ever before. Electric vehicles are another huge source of demand. You'd think this booming industrial demand would send silver prices to the moon, right? But here's the twist. Despite this incredible industrial pool, the price of silver has been relatively subdued compared to what you might expect. It hasn't seen the explosive growth that many analysts predicted based on supply and demand fundamentals alone. Why? A big part of the answer lies on the investment side of the equation and the paper market. While physical demand is strong, the price is heavily influenced by futures contracts and other financial derivatives. Large institutional players can use these paper markets to influence the price, sometimes keeping it suppressed even when physical stockpiles are being drawn down at an alarming rate. This creates a major disconnect. The physical market is screaming shortage, with inventories at major exchanges like the COMEX and the London Bullion Market Association being drawn down significantly. Reports from mints around the world have shown they co-UNT produce silver coins and bars fast enough to meet retail investor demand. Yet, The paper price doesn't fully reflect this reality. This tension between the physical market and the paper market is a huge red flag. It suggests that something has to give. When you see record industrial demand, record investment demand for physical bullion, and dwindling visible inventories, all while the price remains relatively contained, it points to immense pressure building up under the surface. It's like a coiled spring. Many analysts believe this situation is unsustainable. At some point, the reality of the physical shortage could overwhelm the paper market, leading to a dramatic price correction upwards. So, what's the global economic warning here? First, the strong industrial demand, especially from the green sector, shows a structural shift in our economy. But the sluggish price action, influenced by paper markets and a strong US dollar, reflects the broader financial anxieties gripping the globe. We're dealing with high inflation, rising interest rates, designed to combat it, and the looming threat of a recession that these rate hikes could trigger. Essentially, the silver market is caught in a tug-of-war. The industrial side is betting on a future of technological advancement and green energy. The investment and paper side is hedging against a present filled with economic uncertainty and potential financial turmoil. The fact that the price is UN soaring despite the physical squeeze tells us that fears of a global economic slowdown are very real and are actively suppressing investor sentiment. The market is basically saying, yes, we need silver for the future, but we're terrified about the next 12 to 24 months. This is the warning. The silver market is flashing a signal of extreme fragility. The strong physical demand shows the underlying strength in key technological sectors, but the price suppression indicates that the financial system is on edge. If we do tip into a serious global recession, industrial demand for silver could falter, which would align the two sides of the market, though likely at lower prices initially. However, if the financial system experiences a crisis of confidence, we could see a rush into physical assets, and silver's price could break free from the paper market's influence in a spectacular way. So, the next time you hear someone talking about gold, maybe take a moment to check on silver too. Its dual role as both an industrial powerhouse and a monetary metal gives it a unique perspective. Right now, it's telling a story of tension, of a global economy being pulled in two different directions. It's a story of a tech-driven future colliding with present-day financial fears. And how this story unfolds could give us one of the clearest signals about where our economy is headed next. Thanks so much for watching. This is a really complex topic, so I'd love to hear your thoughts in the comments below. What do you think the silver market is telling us? Don't forget to like this video if you found it interesting and subscribe to the channel for more deep dives into the forces shaping our world. See you in the next one.